Hi all, welcome to the fifth episode of Direct Stock Investing series. I know that it's been more than 2 weeks since I uploaded last video. There were a few work commitments, so I couldn't complete the shoot. So yeah, I was working on this for some time now. So yeah, anyway, let's talk about today's topic. So in the last few episodes, I was talking about few financial ratios, few concepts related to stocks, right? I talked about IPO, stock exchange, and in the next videos about dividend buyback and all. And in the last video, I talked about P ratio and market cap. So I thought today I will come up with an extension, uh, probably talking about other few financial ratios like I mentioned in my last video, right? But today's video is not about that because I thought that this particular top requires very much attention. So I thought I will cover it before I proceed with the financial ratios, right? So yeah, as you can see the title and thumbnail, today's video is about what is the difference between trading and investing, right? Because many people are still confused, that many people think what they are doing is investing, but actually what they are doing is trading. So let's break down that in detail, and at the end of this video, everyone should be aware that trading is not exactly the same as investing, right? Yeah, let's talk about it. So there are basically four main parameters that we have to discuss when we talk about uh, trading and investing. So the first point is around time horizon, right? So when we talk about investing, it could be in stocks, it could be in real estate, it could be in currency, gold, whichever the asset class is, right? So we are comparing it with no matter which asset class we are investing. But in this video, let's stick to stocks. We are talking about the stock market investment in terms of investing and trading. Time horizon is what matters the most, right? So when you say you are investing, the time horizon will be for long term. It could be 5, 10, 15 years. Whereas when you are talking about trading, right, it could be immediate. You will be buy a stock today and you may sell tomorrow. Immediate action will be taken. So that is the number one difference, right? Trading is short term, but investing is predominantly long term. And the second point when we talk about the difference is regarding the decision basis. On what basis you are investing and on what basis you are trading. Investing is primarily focused on fundamentals. Fundamentals of the company, what kind of business model the company has, uh, who are the management, how well the business is performing, a lot of aspects, right? What is the balance sheet of the company, cash flow statements, all sort of things. But when it comes to trading, you may not necessarily look into the fundamentals. Of course, you will take a stock which is fundamentally good, but not necessarily think too much about how much value the stock provides. So what you look in when you are trading, right? It's primarily on charts. There are different patterns that you can identify, right? Price action would be another area where you can see support and resistance. You will trade based on that. When the stock goes down 200-day moving average, probably you will buy. It's a good technical indicator. Likewise, right? And there are multiple other points also. Momentum indicator. If the stock has more and more volume coming into it, there is potential for the stock to go up, right? News based trading, if say for example recently uh, trade deal happened between India and Europe, India and US also, right? Some sort of agreement. So which are the stock that benefit out of these trade deals? You can trade on those companies, right? So basically anything short term which can drive the price up, you will trade on such stocks. So it's totally different how you invest and how you trade. Investing is for long term. Investing is by looking into the fundamentals of the company, by seeing the business model, the quality of the company. Trading, when it comes to trading, it is very short term, maybe days or weeks. You look primarily on the price action of the stock. So both trading and investing are very contrasting in nature, right? So we talked about 2 points, and coming back to the third point, which is around risk level, right? When we talk about investing, especially we talk about long-term investing, right? If you do the right research and pick the right company and invest into it, the odds that you succeed, whether you beat the market returns, that is secondary, but at least you make return out of that stock, the chances are high, especially when you are doing the correct research. The the odds that you lose your money is relatively low compared to trading. But when it comes to trading, right, there is high chance that you lose your money. Say for example, you are trading with 10,000 capital, something goes wrong, something goes against your trade, you will lose money. Like, it can, the 10,000 that you put into trade can come down to 9,000, 8,000, and some scenarios it can entirely wipe out your capital as well, right? So risk is relatively high in trading compared to investing. And the fourth point is around effort. How much effort it requires to trade and invest. So when we talk about investing, effort is definitely required because you need to read a lot about a particular company that you are going to invest. You need to go through the annual report, and you need to go through the quarterly results, and you need to understand what kind of management that they have. So a lot of research has to be done, but once it is done, then it's up to the compounding to decide how much money that you are going to make, right? But when it comes to trading, right, since you are trade on the price action, it's a full-time effort, full-time job. You can't stay away from these systems, you can't stay away from the monitor, because you don't know when the opportunity comes, and also you don't know, you can of course keep a stop loss and all, but if something goes wrong, then you will be hit badly. So you have to be with the system, you have to be vigilant when you are trading, right? So effort is much more, especially daily effort is much more in trading compared to investing. So basically these are the 4 points: the time horizon, the decision basis, risk level, and effort. uh, but if you want to see, all of us are working and making money so that we can retire at some point of our life, right? We have to invest that money into whichever asset class we are comfortable with, and at one stage we don't have to worry about money, we have to think about money. That's the ultimate goal, right? That's the aim with which we all are working on. So definitely you need capital for investing. So most people, what they think is that of course they will be working, but as a side hustle they will do trade. As a small deviation from this topic, uh, what most people do is that uh, there are different, like I said, there are different asset classes that you can trade, right? You can trade in stocks, you can trade in currencies, you can trade in gold, and you can trade in derivatives. When I say derivatives, futures and options, right? So these days what's happening is most people are trading in the derivative market. You might have seen the news, right? The volume of derivative market compared to 5 year, how it was and how it is right now. So, and in derivatives, especially the trades majorly happening in options, right? I myself had traded in options for an year, so I know how difficult, or how stressing it is. But most people are trading in the options derivative. Why? Because the price fluctuation is so fast. Sometimes what happens is you will double your money in 1 minute or 5 minutes. So people are crazy about it because it's quick money, right? You can make quick money, and it's like a dopamine hit. So you will think that, okay, I made so and so, I doubled my money, I tripled my money in 5 minutes or 10 minutes, because the option prices will fluctuate like anything, especially when the market movements are so heavy. More people are interested in trading options, and there is a flip side to it. Of course, people will be making quick bucks. At the same time, people can lose money quickly, right? Say the same person who doubled or tripled their money, they can go bankrupt also, so easily. So it's the chances of you winning in trading, especially options, are very very minimal, right? I'm not demotivating any options trader, but I'm just putting a fact over here, right? So of course, so coming back to the point, most people, what they do is they will be working in a job, as a side they will be doing options trading. Some people, one of my friend, he is right now trying to work on stock trading. There is stock options also, you can trade in stock options as well. He is trying to master that. So yeah, different ways you can do that side hustle. But what happens is, most of the time, like I said, it's a full-time effort. You may not be able to invest totally into it, and most likely you will lose your money. You will begin with full josh, and sometimes you will make some quick bucks. You will put some 10,000, and maybe you will make that account into 40,000 and 50,000. But in the next one trade you will lose all. That's the scenario that's happening right now, in most of the cases with most of the people. Ideally, what uh, as someone, you want to build a, massive portfolio, it's okay to trade, but you need to have a strict stop loss. You need to have a good risk reward ratio. You need to be extremely disciplined. Otherwise, the best thing to do is, invest onto your skills, and make sure that you grow in your career and make more money and invest into the markets. Mostly that's the ideal approach. But of course, there are people who make side incomes, like for example Rakesh Jhunjhunwala, right? He often used to say that he used to trade the market, he used to trade the futures, and he makes money from trading to invest into stocks, right? But that's extremely hard, and not everybody can be Rakesh Jhunjhunwala, right? If you have that appetite, go ahead and do it. But otherwise, it's better you focus on making money through your job or through your business or any other side hustle, and invest into the markets, or whichever asset class that you are comfortable with. So the main point here is grow your money, right? So the final verdict that we all know is that investing is to generate wealth, trading is to make that income, right? That's the major difference. Trading is to make money, so that that money can be put into long-term investment to generate wealth. I hope it is very clear. These days, people think that they are investing, say for example, they invest into one company and they are exiting in 1 month, and maybe out of momentum or news that they have heard, they think they are investing, but ideally not, right? 1 month is not a time frame for investment, any sort of investment. So I hope it is clear what is trading, what is investing. Make that distinction extremely clear. Uh, if you are passionate about stock market investing, do subscribe to this channel. I will be coming up with the continuation of the financial ratios in the upcoming videos, and I also start making this series into a point where I will talk about how to pick up stocks, right, for long-term investment. What are the parameters that we have to consider before purchasing a stock? Then how to sit tight even when the companies that you have invested is going through a bad cycle, and when you should exit, right? So there are a lot of videos coming ahead. Stay tuned. So yeah, if you have any questions, feel free to comment below. I'm more than happy to clear that. So yeah, I will come up with the next episode sooner than later. Till then, take care. Bye.